All right. Thank you once again, guys. Thank you for joining in. Um, we are going to be discussing. Uh, we'll be talking about what I said on the channel yesterday. That's how you can study and read my flashcards. All right. So, what are the things you can actually do to study the flashcards? This is actually what I'll be looking at today, or I'll not be discussing much things, just to show you, okay, what does this mean and what does the terms and techniques used. Now, I've not actually not be I've not been indicating what all this means. I've not been indicating that because if you actually spend much time on my channel, you would have actually know where my entry is and all what all these things actually means. Right. So the first thing you should know. So I will actually give room for question if it's actually what I can answer within this webinar. I will answer them, and if not, then I don't know. Uh, okay, the first thing you should know is that I trade higher time frame, and mostly if you see H1 and M15, this actually as a result of me looking for my pattern. I mean, probably my setup on higher time frame. I start um, the analysis from weekly or monthly, as the case may be, then drop down to lower time frame just for me to get direction and where the market is really going to. All right, where the market is really going to. So that's actually what I do by starting from higher time frame, then drop down to lower time frame. So that's reason why, more of the reason why you see this. And mostly, I've actually talked about how to follow the trend. Right, just a minute. I don't know. There are some crazy people here throwing rubbish. So I've actually disabled the annotate.
Yo, who is this man?
There's some crazy people. I've disabled the annotate drawing rubbish on my chat. All right. These are people that just came to
Yo,
play.
people are funny, eh?
They don't have reason why they are here. Just come to play. All right. Can't do that again. All right. So the first thing is actually to look for the pattern. I mean, getting your setup on higher time frame. So after you've gotten your setup, then you can go to lower time frame just to look for the entries. Then you can see my lower time frame is actually H1, gets the setup on H1, then on higher time frame, I mean lower time, another entry that I use is actually M15, M5 or M1 as the case may be. Now this doesn't mean that you cannot trade higher time frame for your entry. You can use that. That's for people that are actually very busy. All right. When you have actually studied my flashcard enough, you should be able to know, okay, what this actually means. Now, the yellow box is actually represent a breaker.
Oh,
While
oh, oh, oh.
what this
What the fuck, dude?
these people. If I discover that person, I'm going to remove that person immediately. The first person, I mean, the first thing you should know is that the yellow box stands for um, uh, a breaker, why this orange actually stands or red box actually stands for uh, the source that I'm actually looking for. So wait for market to get to this zone before looking to M15 to actually cash the trade, right? So when the market, sometimes the market might not actually come to this zone. There are uh, some reversal zone that I actually look out for. There are some reversal zone. You actually check my course outline. You would have actually seen this reversal zone that I look out for. So market might not get to this other block before it reversed. Now the market might get to the fair value gap, right? VG, or a king order block, or the source that we're actually looking for before the market we actually reversed. Now, so this actually H1. You know, before you get to H1, you would have actually done your top-down analysis to H1, then this should be your entry. But I will not enter there. I will actually look to enter in this particular area. Now, all these particular zone you're actually seeing, they are actually kinds of entry. If you miss your entry here, right, you can actually take your entry here, right, this here, this place. If you miss your entry in this particular area, you can take your entry at this particular area. So when you see multiples of all this zone here, you should actually talking about where you are looking to take the trade from, right? Actually looking for your re-entry. So this particular pattern, all this box stands for where I would have actually take
Hello.
I would have
We are not
taken this
seeing
trade.
we are not seeing your cruiser. We are not seeing where you are showing.
I don't know this person.
We are not seeing where you are showing.
Please
Can you
just pay
just
attention. Don't, please don't unmute yourself again because I need to get that person laughing and remove that person from this group. If you unmute yourself again, if I hear you speak, I'm actually going to remove you. If you want to talk, please just use the chat box. Can you see my cursor now? Nobody should mute himself again, please. If I get that person, I'm going to remove that person immediately. Can you see my screen now? Can you see the flashcard?
No, puto. No.
I need to remove some people here. Please give me a minute. Nobody should mute himself. Can you see my flashcard now? Can you see the card?
Yes, we can.
All right. So you can also see my cursor now. Now, this yellow box, this is actually H1, just like what I said. You get your setup from higher time frame, then you come to H1, which should actually be your entry. But if you don't actually want to use your entry from H1, you can get your entry from lower time frame as low as M1, M5, or M15. Right, you get your setup on H1. Right after getting that, then just like what I said, these are kinds of re-entries. When you see all these boxes, they are actually kinds of re-entries where you can actually, stack in, when you can actually stack in your position, take trade more positions, and you put your stop loss between the zones you're actually looking at. So that is actually how you can trade that. If you actually do not take your trade here, you can actually as well take your trade in this particular zone, right? If you actually do not take your zone, trade at this particular zone, you can as well take your trade at this particular zone. So these are actually kinds of re-entries. So what you just need to enter is, what you just need to do is to look for how I mark this chart, then actually read them, then you can as well do well to mark these zones. No, the first thing you will do is actually to mark this on a lower time frame, right? Mark this on a lower, on this higher time frame. Just you studying it. Let me just quickly go to that chart and show you that example. Now, this is 1 hour USDJPY, 1 hour time frame. Now, this particular zone, you can mark it here and actually see how that zone actually played out. So this is actually how to learn, how to study. Now you can now go to that M5, then you see those particulars. You can see that it came here to retest this particular zone. Then you can now mark that and see how it played out on your own chart and mark my zone. Then you can as well, because everything is actually the same thing. So you will see that the signature keep repeating itself over and over again. So that is actually how you will learn And you can, when I send my setup, you can as well just look for the entries for you to take the entries. So when you ask me that what's my entry, I will not answer you. You're only my student that actually knows, because there is a video I've actually done on the entries and actually how to look for the rules before you take that. But for the free class, you just look out for um what I have marked, just like what I've actually marked here. Then you trade them accordingly. Right? You trade them accordingly. That is that. Let me go back to the chart. Now. So that's actually on USDCHF trade. Then on Euro card, you can see it's actually the same pattern that we are looking out for. Now, these are the kinds of entry. This is actually entry one. This is entry two. This is entry three. This is entry four. This is actually M5 as well. You can see you have four opportunities to enter this trade. So even though you actually lose one trade, right, because this trade is actually on a clear downtrend, right? Don't forget, I had a webinar with you guys on market structure and institutional order flows. So it's just you following that order, all right? So in a bearish institutional order flow, or when the market is actually clear in bearish market structure, then you are not looking to buy, you are just looking for opportunity for you to sell the market. So these are the kinds of entry. As you can see, this yellow box also means breaker. So you just look for all this opportunity for you to catch the move. Very, very important, right? Very, very important. So so you can as well mark, just like what I did on USDCHF, mark that zone, look at AUD USD, you mark that zone, then you see how it actually responds to that zone. You might not actually have the knowledge to be taking trade that are king, because I'm not going to discuss that, or fair value gap if you guys know what's fair value gap already. So because market might not actually get to this zone before it get reversed. So that's more of the reason why we teach all those important zones that the market actually reverse from. So you just pay attention to know what actually on what we mean by those zones before you actually take them. All right, these are actually another four kinds of entry too. So if you actually miss this one, you should not miss this. If you miss this one, you should not miss this. If you miss this one, you should not miss this. Then there's really some another opportunity in this particular area here that you might have actually taken that trade from. So this is actually AUD USD. So this trade is actually on a clear downtrend. Don't forget what I said. That's why the fact that you're actually seeing this bullish run, that doesn't mean that okay, this is actually going to last forever. But you should know that okay, it's just for a while. Then you are anticipating the reversal. I mean, just like this particular bullish run, if you actually listen quite all right into what I explained in the market structure and institutional flow, the webinars we did last Saturday, I said that when the market is actually in a bearish condition, there's actually we might actually see an instance where the market will actually give you bullish move. So in that bullish move, all what you are looking out for is a reversal zone whereby you continue with that trend. So until the trend on higher time frame changed, your bias in higher time frame still remain the direction that the market structure and the institutional order flow has given to you. So you need to understand that you must not trade against the trend, right? You must not trade against the trend. I'm not talking about if you're actually very wise enough to trade counter. You can trade counter because sometimes taking counter trend will actually be from lower time frame, quite all right. But you know, this the financial market is actually very peculiar because when you say okay, you actually want to trade with the trend, you say it's actually from higher time frame, but you know that the trend from higher time frame actually started from lower time frame, right? So that is why you should not. You can take counter trend, but it's actually very difficult for you to predict when the reversal will surely come up and actually follow that. So the best thing for you to do is just to go for low risk reward ratio. Or probably if you are doing 1 to 10 before, you can do 1 to 5. Then if you now see that okay, the market is now established, then you can now be looking for opportunity to buy it more or to sell it more as the case may be. So to real this, you can actually say, okay, we have our source, we have our breaker, the market traded back into the source on 8-4, then on M5, this is actually the pattern we have and different entry rules that you would have actually seen. So what you're just looking out for is just the entry pattern for you to take your trade from. the entry patterns for you to take your trade from. Now, that said, then on Euro USD, the same thing. On Euro USD, that's actually H1. You can see this market is actually in a clear downtrend. A clear downtrend. So market did what? Market um, gave us a pattern in this particular area. So what you're expected to do is go to a higher time frame. I mean lower time frame M5. Then you look for your entries. If you actually, this is actually where I got my own entry from. Right, this area it actually took out this high. Then I use my, there's actually a method I use to predict stop hunt. Right, I can actually know if this is actually a stop hunt or not. I do actually we had a webinar this morning that I actually taught my students that even though they actually know that before, you just have to do a quick revision on that this morning, so you can predict how a liquidity will actually happen or not. So it's actually a very techniques we use in our method to predict that liquidity. You can actually predict, okay, this liquidity will happen, then you actually take your trade from there. Then it's actually quick once you see risk reward ratio on this particular trade alone. So if your entry, if you actually failed an entry, because some people will just jump into a trade, we don't do that. Yeah, let me just say, I don't do that. Right, I confirm a trade before entry. That's why sometimes I'm actually lose. I mean, some entries, but because of our method, we can easily, because the market will still give you an opportunity to enter. There is no how. The market will surely give you an opportunity. So I don't chase price. I don't chase entry. When my entry is on, because I love using very tight stop loss as low as 2 pips, as low as 3 pips, or lesser than that. I love using tight stop loss. All right. Sometimes I've used 20 pips, I've used 10 pips, or as the case may be, depending on the pair. But I love using tight stop loss because using tight stop loss will actually give you high risk reward, right? High risk reward, and you make it to increase your lot size, then you make it to have to bank so much money. So when I miss my entries, I will not jump into that trade. I will just look for opportunity to re-enter, right? So that's actually the culture that you should also practice. So if you actually miss this entry here, there is another opportunity for you to take this entry in this particular area. And if you miss this one here, there's actually another opportunity for you to take it at this particular area before this market now drop down. You can see even late in New York section, you see you have an opportunity to enter, then before this market now drop back. All right. So this is actually another one. As you can see, how many entries we have here: one, two, three kinds of entries. This is actually another one, but it's already late at night. So and it's actually Friday, so we couldn't take this. You can see the pattern. All right, you can see the pattern. The pattern played out, came back to retest this zone. Then we can actually look to enter the pair. Very, very important thing for you. So your own work is just to mark it on your chart and actually see what actually makes it uh, easier for you to take the trade. So there are some questions that I will not answer. That's the reason why I have mentorship group. So you guys should be able to discover that by yourself. Now, that's if you actually want free things. If you don't want to pay for the work of another, then you should be able to do the work by yourself. Now, this is another setup that we have here, NZD card. Then we have entries, right? We have entries. This is also another liquidity graph that we can as well predict when it will happen. Then these are entries. It's actually a very smooth one. Then we have another one in here, right? Very good one. And an SDD USD, we had like 1, 2, 3, 4 entries that actually played out here. So you can see, even though you actually lose one trade, on another trade, it will actually cover for 3 trades or 4 trades that you actually lost. Finding a re-entry, stacking the trade, as long as you're actually seeing that, and you have a place where you put your stop loss. Your stop loss will be placed at the point of validation. Point of invalidation are the zones whereby you know when this market gets to this zone, it will actually invalidate your setup, right? So this is also applicable to lower time frame for you to get point of validation. Then you continue to place your stop loss there. So if your stop loss is it, that's why in my method, there's no how you will not use stop loss. If you are trading without stop loss, you just know that you actually want to kill yourself, right? Because trading without stop loss can actually pay you for some time, but when it's actually going to take the money back, all your money will be gone. So this is another setup of Nasdaq. It's actually very big money, right? So this pair has actually been on a clear downtrend. So if you're actually wise enough, when everybody actually crying in the stock, I mean in the financial market now, that the market is actually dropping. Do you know that you following our system, following our method, you would have actually been banking so much money? Because right from 2 weeks ago, I've actually had one direction toward the bears, right? And I said it on Monday. For those of you that are asking me, "Well, why didn't I post it up?" I already said it on Monday. If you actually go through the chart, that okay, this is actually going to be my bias for the rest of the week. So the setup I sent on Monday, I used the bias for the rest of the week, right? So all these trades, they are what you can actually trade with, and this particular pair has actually been going down right from last 2 weeks. Then you can see your only and single direction on this pair should be down, right? So even though it's actually going to buy, some people will be buying it, but you that you actually have knowledge in liquidity trading style, right? You should be know that the market will buy to sell, right? The market will buy to sell, or the market maker or liquidity providers, they will buy to sell. So they will induce people to take buy positions, because a lot of people are already seen to buy those pairs, especially GBPUSD actually give more than 1,000 pips, right? Then Euro USD, many people are actually anticipating. Uh, Many people, let me share the screen, right? Um, Weekly Euro USD. Can you see many people are anticipating that okay, they want to buy, they want to buy, they want to buy, but this is actually clear. We have already spotted that liquidity graph there. All right, we spot that okay, all this has been taken high. So what I'm actually expecting is that this low to be taken, and this actually gave more than 617 pips. And yet for GBP USD, we check GBP USD, and this is actually on daily. This is actually on daily. So this liquidity graph, this already gave me my setup here, right? Took out liquidity, drop, then market came back here to taking out all these things. I did not actually not expect this. What my expectations was actually this low, but market actually came all the way and actually broke all those structure. This particular low here, that's actually where I'm actually expecting this pair to come down from this area to this area, like about 1,000 pips. Then you can see it drop more than 1,700 pips. The same thing with Euro GBP. Euro GBP in one of our classes, I've actually explained to my student that okay, because of our pattern that we've actually seen on this pair, it actually give us the pattern. As you can see, what happened on this pair, give more than 1,002 pips. So this is actually something you can predict. You can know when liquidity is actually about to take place and the likes. So these are the things you look out for in there. So as you can see, when other people are actually selling that, when other people are selling, you are looking to buy. You are just looking for buying opportunity. The same way in this area. Some people are even preparing that Euro USD is about to buy until Euro USD bought them. Right? They were bought by Euro USD. Right? You can see it actually induced traders to actually take buy positions. Right? Then actually took back the position back. Right? So this is actually how you trade, having liquidity in mind that okay, the market does not just work without grabbing liquidities. These are actually very important things you must note, right? This is actually Nasdaq, actually, and this is actually USD30. If you're actually trading this pair, you should know that this is actually big money, right? And you actually have entry here from one. Oh, sorry, let me. Um, just a minute. We have entry one, entry two, entry three, right? These are the zones that you can actually look to buy your uh, your pair from, right? To trade that particular thing. You can see they induce people to take buy position, even people trading just some breaker, they would have actually trapped them here, right? More of the reason why those people trading Nado style, right? We are trying to trading Nado method. You will notice that sometimes that you actually marking the source, then the source will actually take you out. There's actually a reason behind that, right? We are trading that source and breaker, we are trading ICT, all those things actually need to understand how the market works. That market actually based on liquidities and how that. So you actually know that okay, the market is actually a clear trend, and you can actually see the pattern played out here. They're just expecting the best position for you to buy this trade. And just like what I said, I think I've said it in one of the webinars. I love market to go deep in a bearish market, to go deep into a bullish trend. Then I will just look for best opportunity for me to buy. when I buy, I mean, for to sell it, when I sell it, it will actually give me maximum profit, right? So, right. So, let me take. I need to remove this person. He's just sending rubbish to this place. And can we see? Even though I go to CG, I will not explain my strategy to you here. Let me look for that guy. The guy that's causing trouble here. Let me look for the, I'm not sure he's still here again. Just came to look for trouble and he's out. I'll look for him on my channel and just remove him. He's not here any longer. All right. So that's actually what I want to discuss with you. You can just practice that, mark that on your chart, and actually see how they played out. So, is there any question?
Hello, good morning.
Sorry, just a minute. What is imaginary stop loss? Just a minute, please. Just a minute. Just mute yourself. What does imaginary stop loss? Please don't use what is called. I think imaginary stop loss means that you will not use a stop loss when you actually enter your trade. That is not a very good trading style. It's not even very good. That's actually a bad trading style because you will not have risk management. You're just using imaginary that, oh, when this market actually comes to this zone and you want to close your trade, that's actually a very bad trading style. You use your stop loss. I've mentioned point of validation. Point of validation is based on your own setup. Put your stop loss at the point whereby you know that when market comes to this area, then it will not take you out. The same thing is actually applicable to lower time frame. I actually want to take the trade. All right. Right. So will you post setup this week? I don't like people dictating to me in such a way. I don't know. If I feel so, I will post it. If I don't feel. But I post setup once in a week. So you can expect it any day. But most times on Monday. But the last 2 weeks I posted it for the complete week. That doesn't mean that I will continue to do that because for me it actually takes my time. And I think I'm attending to so many things here. But except if my students actually want to post, if they make setup, if I see that okay, I should share that. I find a reason to share that. I will surely share that. If not, just stick to my one day setup that I've been doing. Right. So if you want to talk, you can actually talk now. So we're gonna ask a question. How do you know it's an IP? The IP is actually your point of interest. It's a point of interest when you're expecting markets to reverse from. And this is actually based on what you're trading. Right. So if you want to ask a question, you can ask now before we call it a day. So again, just look for the opportunity to study those flashcards. Studying the flashcard alone is actually enough.
Can you hear me now?
Yeah, I can hear you. Your network is very bad. Your network is bad. That's why it sounds like that.
Hello?
I can hear you.
Okay. Please, what does the yellow box stand for?
Breaker.
Can you hear me now?
Breaker stands for breaker.
Hello? Can you know? Okay, what does the yellow box stand for? And what are the criteria that okay, and what are the criteria that the yellow box
there is noise in where you are.
That noise is not from my end.
Not from your end.
No. Well, let me just type it.
All right.
It's not from my end. Let me just type it. Okay, well, can you hear me now?
I can hear you, but
can you hear me now?
Oh, just a minute. Let me just look for.
Can you hear me now?
Wait, just a minute. Let me search for people that did not mute there. You can speak on now.
Okay. So my question is, so what are the criteria to indicate that the yellow box is
The yellow box means breaker.
Strategy position is supposed to be.
Please, can you just type the question? I can't hear it clearly.
Yeah. So what if one draws it and gets it wrong and does not get it right? Okay.
That's why you need training.
Let me type it.
If you don't understand what breaker means, then you can go and study materials online. I have different materials online. I mean, on my channel, that's Telegram channel. You can go back and actually go and study them. I have materials there. You can go and study what that means. I have used different examples. Don't ask me what video is that. I don't know. I have many videos there, so just go and study it. But if you want a definite one, then you will need to come and see me. Right.
Trading from breaker and from order block, which one is better?
Sorry?
Trading from the breaker, point of breaker, and allowing it to get to the order block, which one will be better?
Trading from breaker or getting to order block. Now, it depends on what you're actually trading. Market can get to the breaker and reverse, or market can get to the order block. So you just wait for where your entry rules will be met. If your entry rules are met on the breaker, it's fine, you can trade. If your entry rules are met in the order block, then you trade from there. You trade from there. So it's where your entry rules are met. That's where you trade from. So most of the time, market will actually come to the order block instead of the breaker. All right. Any other question? Okay. If there's no question, you can ask. Just take your time today.
Can you hear me?
I can hear you. Your listening.
On the issue of the flashcards, like if I make a flashcard, I save it on my system.
Okay.
And you know,
That's my question. Can you
That's question already. You guys should make it organized. Somebody's asking question, another person is asking question again. How do you want me to listen? Please type your question. Please type your question and let me just attend to them. If not, I think we are done actually. So if you have any question, you can actually message me. And if you don't understand that, then that's why the mentorship is actually meant for you. You come and learn it. And for some of you that are saying that the materials are free online, go and get it online and study it. My materials is not the same thing. And for people that ask me about Nado course, my material is not the same thing with Nado. Right. So it's left for you. I've actually provide free education enough for you guys to learn how to trade by yourself. So, and the free materials I'm actually giving out is actually a general thing, what you can apply to your trading style, not teaching you a strategy at all. So, because when I'm just teaching you a halfway strategy, then that is actually deadly for you. But I'm teaching what is actually general that you can actually add to your strategy to spice it up. So it's not a must for you to come and learn. You can just learn on your own, it's fine. Right. So if there's no more question, then I will, let me see. You have a problem with flashcard and how to use them. I don't know what you actually means by that. If it's actually my own flashcard, then you can, I've actually explained how to use them. But if your own flashcard, I don't know what the problem is. I even tell somebody about flashcard. He was saying that flashcard is an indicator or flashcard is an EA. That's actually ignorance. Flashcard, they actually chart you marked for educational purposes or just for reference purpose for you to look at it again or the likes. So do you have any indicator that draws OP automatically? You can use your hand to draw. Why do you always depend on indicator? Use your hand to draw. You don't need any indicator that draw OP. No. You just use your hand to draw. How do you determine a reversal or source? How to take a source trade? Go and study the flashcard. How to take a source trade? You go and study the flashcard and know how to do that. I have brain which okay, I've actually answered this. Do you have any? I think I've answered this. Right. I think there is no more question for me to answer based on what I explained today. Right. If you have any personal question and if you have strategy problem, then it's best for you to get somebody that will teach you. Right. One thing I'm going to tell you is that nobody actually learns with individually. Right. You can actually say that we have people that are actually studying ICT material for free. And I think there was a guy that actually came to my page and said, "Oh, this guy is teaching you what material is actually free online." Good for him. I removed him immediately because those guys are not guys that you can actually allow there. I don't know why he came to my group in the first place. I don't know why you're in my channel. You know that they are actually free. Then why are you on my page? Then just go elsewhere and go and create your own page and be sharing ICT material there. So it's left for you if you actually want to learn that. We have many ICT groups you can join. Go and join them. I don't know them, right? So don't ask me how to join. Just go and look for them on Telegram and join them. They will share you materials. Go and study it. If you are profitable, it's fine. But I have not seen anybody that will really say that you study ICT material all by yourself or any material by yourself, and you don't have anybody that will put you through. It's not possible, right? It's not actually possible. And if it's possible, it's fine by you, and that you don't actually have somebody that will just put you through and actually guide you in what you're doing. Even though you are actually good, you cannot be as successful as you ought to be. Or even though you are successful, the time you are going to take before you are successful is actually going to take a whole lot of time. Because paying for somebody's knowledge we actually aid you from wasting time that person actually wasted. So it will actually slim down your time of learning and your time of doing trials and errors. Some people have money in their account and they are looking for free education. It's left to you. All right. All right. Thank you, guys. I will see you next time. If you have any other question, you can just send it to me on the group page, right? So I will do well. You guys know I will always answer your question. I'm always online. Apart from sleeping, I will surely answer your question. Thank you, and keep studying. This time, don't use it to party, even though there's actually coronavirus everywhere. But many people are actually in their houses. Then you should actually do well to use this time. This is actually the best time for you to study. Take time to study, and come fresh on Monday to the markets, and you trade with a very fresh mind and with a very uh, good heart in the market. All right, I will see you next time. Have a good day.